All right. Uh, Hello, everyone. My name is Izwan. I'm from DataLog Finance, based in Kuala Lumpur, Malaysia. So, first of all, I would like to say thank you to all our audience today for attending this workshop sessions. So, during this session, we'll be discussing one of the key subject in Treasury, that is management of in-house bank, the implementations and challenges. Today, when we look at the Malaysia and Asia market, we can see more and more large corporations start to implement in-house bank model. So therefore, I hope our session today will bring benefit to the audience and corporates who have a plan to implement this model in the future. I'm honored to have our special guest today, Arno from Eurofins. Hello, Arno.
Hello, Iswan.
Thanks for joining our session today. So, as an introduction, can you briefly share with our audience about Eurofins, the presence in South Malaysia or Asia, and your roles today in the Treasury Department?
Sure, thank you, Iswan. So, Eurofins, first of all, is a group of independent laboratories. We are doing testing on many things, environment, pharmaceutical, food, and we are considered to be the leader on those markets. We also tested for COVID, so it's very
Mhm.
current right now,
Yes.
So we did a big effort to support
All
those
right.
testing because our motto is testing for life. So it's really relevant right now. Eurofins is a 5.5 billion euro sales company. It was created roughly 30 years ago. So you see a high-speed
Hmm.
company. We
Yes.
have roughly 50,000 employees across the world, across 50 countries. So if we talk about Asia, we are present in Japan, in Australia, New Zealand, in Singapore, in Korea, in India, in China. We are across Asia. And to introduce myself a bit more, so I'm the head of cash management for Eurofins for 5 years now. So I deal with banking RFPs, I deal with cash poolings and so on. That's one of my role. And the second
Hmm.
role is to manage the treasury system. So that's why I'm here today.
That's great. That's great. Thanks for the introductions. So I understand Eurofins has implemented the in-house bank model in Treasury Lines in 2018. Maybe you can share the key element for the implementations and how it benefits Eurofins.
Sure. So first of all, what is an in-house bank? So an in-house bank is services, let's say, that usually a bank provides to the customers, but in this model, it's the group itself that want to internalize those services. So in terms of services, we talk about internal financing. Instead of going to the bank to ask for a loan or something, basically the group provides the financing to its subs. So financing in terms of cash pooling and current accounts. So we will talk
Hmm.
about it today. Interco loan financing, we'll talk about it today. Capital injection, so when you need to increase the capital of the companies. So that's one type of services. You can also provide FX, so FX spot, if the company has too much, I don't know, dollars and need to sell against GPY, for instance, instead of going to the bank and have an increased margin, let's say you can do it through the internal bank and keep the margin, the spread within the group.
Hmm.
And you can do FX hedging, so hedging your future cash flows, for instance. So you will use forwards, maybe swaps, which is a bit different, options, and so on. And you can also hedge interest rates or commodities. I worked previously at Valeo. I was in charge of commodity
Hmm.
hedging.
Hmm.
So that's what you can do for your subs to make sure you manage the risk and you have a good, a seamless circulation of cash across the group, because it's important, that you concentrate the cash at group level so that you can
Right.
finance the other subs, or you can finance your acquisition or repay your bonds. So if I talk about the advantages now of an in-house bank and why we wanted to implement it. So first of all, it's to streamline the cash management across the group. As I said, we have cash pooling and so on that will enable better cash circulation across the group. It also foster internal processes. You have a system, you have you deal like a bank with your subs, so it means you need to have clear processes how you do it, and potentially you can also implement SLAs to your subs, meaning that you can let's say commit to a deadline, while when you go to a bank sometime, if it's financing, you never know how long it will take to get a financing. So also it brings you flexibility internally to build your services to the subs. In terms of timing, you can go faster, but also you can prevent having covenants, for instance, and so on. When you do a group financing with external banks, usually they like that the financing to the group is held at the top level. So it's better than that you do your internal financing than rather than going to the banks on each individual local levels, I would say. So that's one thing. Another thing is about also increasing the security of your transactions, because, for instance, you can do POBO, payment on behalf of, meaning that you will concentrate the payment on one point of the group, and you can put a lot of security to this point of the group. You can also put some payments or some transactions on current accounts, which means that instead of doing banking flows, which cost, but also which is at risk in terms of security, you do it on current account, it stays within the group. So it can increase the security. Third of all, I would say you increase your visibility and hence your controls in real time, because everybody has the same processes, has the same system. We will talk about the system to support an in-house bank. It's important that you have one system to do it, and so real time you will have all the information gathered in one place. So that's very important. Fourth thing, I would say you can better also adjust. We will talk about that later. You can better adjust the risk or the spreads and so on to the risk profile of your subs. It's important in terms of regulation, transfer pricing policy, and so on. So you can be more flexible in a way. And so in terms of consequence, basically, you can reduce your cost because you have less banking transaction, you internalize the margin and so on. You have a real-time vision with one place to concentrate the risk. You have a better visibility about your financial transactions as a whole. You have a better standardization, and you can also have a more structured relationship with your banks, because you know exactly what you will give to the banks and what you keep internally, and what you give to the bank normally will really bring value to the banks, instead of giving them a lot of small things that sometimes they don't like. So just another thing about in-house bank. So when do you implement an in-house bank? I would say it's when you start to be a large company, but not that large. I would say from 200, 300 million euro equivalent, you can start having an in-house bank. It really makes sense. And why? It's also because you will go abroad when you start to grow. And when you go abroad, you have language barriers, you have different regulations, you have different processes and so on. Having this structure of in-house bank, because from the country where you operate, you can't know all these constraints. So it's better to have local teams and to have a system to communicate with those teams and be closer, I would say, to the local market. So for this, we need a system.
That's great. That's great. So now thanks for the explanations, Arno. So now we understand the in-house bank overview and some other benefits, especially to Eurofins. Based on your experience, can you describe steps that you have taken to implement and deploy the in-house bank within Treasury Line?
Sure. So first of all, you need to think about the services and the organization you will provide to the subs. So basically, you can say what, so which
Mm-hmm.
services, how, so which processes you will implement to manage those services, and also who, so the people, the resources, and the competencies you need to have in your team. Because as I said, you take business from the external banks, let's say, and you put it
Mm-hmm.
internally. So you need to have some,
Right.
let's say, banking competencies, even if it's maybe not
That's
as
true.
high as
Yeah.
in a bank, but still. And so you need to think also about people. So if we look at the different steps, so first of all, you need to define the organization and the hierarchy, meaning that you will have, of course, at the group level, one global in-house bank, but then you
Mm-hmm.
can think about having intermediary steps between the top in-house bank and the subs. Basically, you can put intermediary in-house bank by countries, or by reporting lines. So for instance, at Eurofins, we have roughly 15 in-house banks, and we decided to do it by country
Mm-hmm.
because in each country we have a lot of subs.
That's
So
true. Okay.
it's better to have the local subs. The French people knows their local subs, the German ones know their subs, the
Right.
Japanese
Right.
ones know their subs, and so on. And then we link those internal national in-house banks to the group level. Um, so that's important because the second step that you will need to do based on this organization is to create the current account, so the links between the subs and the in-house bank. And you need to think also about the currencies. Usually the current account have a link also with the currency. So for instance, in China, maybe you will have a current account in renminbi, but also in
Mm-hmm.
US dollar or in euro if you have the agreements from the central banks to do that. Um, and in this creation of current account, the services you will implement are also important, because you may have different current accounts for FX, for
Mm-hmm.
POBO, for cash pool, and so on, and maybe with different spreads. Um, the third thing I would say is defining the limit management. So basically, if you do, for instance, a cash pool, so it means the funds, the subs can draw on funds every day.
Mm-hmm.
But you need at group level to make sure that you have enough money to be solvent and to be able
Right.
to provide this money. So do you put some limits? For instance, a specific sub can only draw 1 million GPY
Mm-hmm.
or 10 million, so that you can make sure that uh, you are solvent at group level. So limit management is very important. Once you have that, you need also to define and analyze the market risk. So basically, it means how will you charge the subs for the service you provide? Do you put a spread? Do you want to make a profit at group level for this in-house bank activity to pay, for instance, the salaries of the people that
Mm-hmm.
you will have in this in-house bank? Um, do you just provide the same price as the one you may get from the market? Basically, when you are an in-house bank, you concentrate the deals at group level, you net them, and
Mm-hmm.
the remaining, the outstanding position, you deal with it with the bank. So you just give back this price, or do you put a margin? And
Mm-hmm.
also you manage different currencies, for instance. So for each currency, you have a specific reference rate, LIBOR GPY, LIBOR dollar, Euribor,
Mm-hmm.
blah, blah, blah. So you need to define all this. And when you have defined all this, you can start signing the contracts that will support all these activities. And the last thing, it's about workflow and life cycle management. How will you deal with those transactions? For instance, at Eurofins, we have interco loans. Interco loans, they are very long term. They are 5 years, 7 years, 10 years, maybe sometimes 15 or
Mm-hmm.
20 years for real estate.
Yeah.
So from the start, you need to be able to know what will happen in the future. So we will talk
Right.
about this later.
Right.
So
Right.
that's the steps that are important to think about before you
Mm-hmm.
start an in bank to make it right from the
That's
beginning.
Yeah, that's great. That's great. Thanks for the explanation, Arno. So, from your point of view, do you think the same setup can be applied here in Malaysia or in Asia?
Yes, I think so because basically. In Asia, you deal with a lot of currencies. So first of all, it makes sense to have this kind of in-house bank to
Mm-hmm.
manage the FX of the different countries. Uh, Also in Asia, I would say there are different types of country. I would say there are green countries in terms of regulation. So Japan, Australia, New Zealand,
Mm-hmm.
Singapore, and so on, where you can do a lot of things. So you can do cash poolings, no problem. Um, then I would say there are orange or gray
Mm-hmm.
countries like
Yeah,
China, where you can do many things, but you need approvals. But now, China is really opening, so you can do
right.
cash pooling if you have the agreements from PBOC or from SAFE, and you work with your bank to do that. And then I would say there are red countries like India, where cross-border it's not possible to do something, but still domestically you can do things
Mm-hmm.
like cash pools. And India changed its regulation about tax on dividends, for instance. So now
Mm-hmm.
it makes sense, to do potentially a domestic cash pool. And
Understand.
for this, you need to have one center, I would say, in Asia, because if you are, for instance, a European or US company, still, I'm based in Europe, but when my Asian colleagues are working, I'm sleeping. So you need
Mm-hmm.
to have someone
Yes. Yes.
locally to manage this. So it makes sense to have
True.
a regional center in Asia, or if it's an Asian company, to have, of course, its headquarter and the treasury operations piloted from there. And
Mm-hmm.
so usually we see those hubs of treasury in Singapore, in Malaysia, those countries. So it really makes sense. And yes, this model of in-house bank can really be implemented in Asia and in Malaysia in particular.
That's great. That's great. Thanks for that, Arno. So, in the context of Eurofins, can you describe in more detail the in-house bank model that has been adopted, and what is the driving factors for the deployment?
Sure. So at Eurofins, I would say there was two things. There is a Eurofins specific context, I would say,
Mm-hmm.
and then there is the needs that are generic for all treasurers. So if I start with Eurofins, we are a multinational company. We have 800 to 900 subsidiaries, so
Mm-hmm.
legal
Mm-hmm.
entities. So you see
Yep.
it's quite large. So it makes quite a lot of complexity. We have, as I said previously, several in-house banks. So we decided to have in-house banks per country or small area. So France, Germany, Nordics, US, Japan.
Mm-hmm.
We just launched cash pool in Japan, for instance.
Mm-hmm.
Um, so I would say across the globe, we have at least 15 in-house banks. Um, and also, we are a company that grows very fast. For instance, when I joined the group 5 years ago, we did 2.5 billion euro sales. Now
Right.
we are at 5.5. So we more than doubled in
Wow.
five
Yep.
years.
Yep.
And this is linked also to acquisition. We have a good organic growth, but
Mm-hmm.
also we do a lot of M&A. And in M&A, it's critical transactions where you don't want the funds to go
Mm-hmm. Mm-hmm.
anywhere. You
Right.
need to have a lot of security. So it was important for us to manage this correctly, to have a high level of security for those deals. So system was really important. And if I go back to the number of subs, it means we have a lot of current accounts. We will deal with that just later, but it means it's a lot of complexity. And before
Mm-hmm.
I joined, we
Mm-hmm.
didn't have a system. We had an in-house bank, let's say, but not a system. So it means everything was in Excel, manual, with a risk of errors, a lot of
Understand.
currencies, so wrong rate applied
Right.
sometimes. So we needed to do corrections when we saw that. It's a mess. So we
Mm-hmm.
really needed to make it clean, and a system really helps for this. And when you do an in-house bank, you really need to have a system at the same time to make things clear and right from the beginning. So that's the context, which means that in 2017, we started an RFP, and end of 2017, we chose DataLog Finance to be our partner on this project and to select a Treasury Line. So we worked, let's say, 6 months with DataLog to go live. We went live in July 2018, so it was quite a short project, you know. For the treasury part, so the corporate level, managing our loans, our current accounts, and so on. And then there are further steps that we may talk about later. And in our specific context of Eurofins, the way we finance our sub is quite special because we have cash pools, ZBA cash pool with banks, but actually the way we finance our sub is through pre-authorization of funding. So it means a sub cannot just say, okay, I'm in ZBA cash pool, so I can draw whatever I want. No, the subs cannot be net borrower in the cash pool. They need always to run their current account with positive cash, which means when they need money, so they can get back the money on the current account, but if they need more, they need to do a specific step, providing a balance sheet, P&L, and a cash flow statement, so with actual and budget, and we decide whether we will finance or not based on this. So it means we need to have another process than the current account and the cash pools to finance our sub. And with this, or to support this, we use interco loans, and sometimes we do also equity injection. So it's a special steps where we need to have workflow of approvals, where we need to capture the amount that is approved, but maybe not everything is drawn at the same time. So it brings more complexity, and it's a specific instrument, and DataLog Finance was able to really provide something good on this topic. So that's basically the specifics of Eurofins, first of all.
Thanks, Arnold. So I just want to relate back to what you mentioned just now about the treasury system, and with the continuous growth, the complexity, and the challenges. How important is treasury management system, and how treasury lines helps Eurofins?
Yeah, so as I said, doing an in-house bank without having a system is a nightmare.
Right.
And when you want to do an in-house bank, you are always limited in terms of internal resources and so on. So basically, what we were looking for, and that we found actually, is I would say standardization, automation, industrialization. We will talk about our intercolon. We have a large portfolio of intercolon. It needs to be seamless and to use as little resources in terms of staff as possible. So the system needs to be able to automatically do some calculation, to provide accounting, many things like that, to save us time as much as possible. So that was the first critical point. The second thing that we wanted is basically a system that is fully integrated. So meaning we have all modules in one system, I would say one-stop shop where you can do all your treasury activity. So it means you have a front to back process, and to payment, to accounting, to reporting. Basically, you have one database, you have the modules on the database, and you can do everything with a process, and you can feed also other systems for accounting, for reporting. You can be connected directly from the transactions to the, let's say, the banking module, to the banks automatically. And DataLog has all that in one system, in one place. So it's really important rather than doing interfaces with other systems and so on. Then it was also important for us, because we are a listed company, to comply with all the regulation. And, since I've been working in Treasury for 12 years, I saw the regulation increase a lot. So we can talk about, first of all, of course, auditability. For the auditors, we are a listed company, so we need to provide audited statements, but also about managing the withholding tax. We have a lot of loans, and withholding tax, it's depending on the country where you send the funds, the country that receives the funds. So it creates a complexity. You have also the concept of BEPS. BEPS is basis earnings and profit sharing. So basically, it refers to, let's say, tax transfer pricing
Right.
policy. You need to make the right rate to a sub based on some criteria. And so to make it the right way, we have a lot of different spreads possible. We will talk about it during with our intercolons, which means that, you know, when you have a lot of spreads, you have a lot of currencies, so reference rate, you have a lot of withholding tax rates, depending on the countries. It makes a lot of complexity. You can make a lot of mistakes. So basically, we were looking at making the things right and to avoid mistakes. Let's say error-free. And when you have a system, you have processes to do that. You have a front-to-back review. It's not an Excel when you change a cell, then it can impact another cell that you didn't think about. No, here you have a system. It's really well done. So
Right.
that's what we were looking at, and that we managed.
Right. Right. Thanks for that. So I'm going to touch a little bit about the centralizations, and we understand the nature of a global company like Eurofins to run its operations on a different time zone. In your opinion, what is the best model to run the operations?
So I would say that you need to have a 24/5 model where, you know, treasury, you can't stop treasury. You do
Right.
payments all the time and on different time zones. So basically, you need to have an organization where you have a hub in Asia to support the Asian colleagues, then a hub in Europe to support Europe, potentially also US if you do late shift. Otherwise, you need also to have a team in the US so that you cover the full
Correct.
spectrum, let's say, follow the sun model. For this, of course, you need a system so that everyone has the same information whenever they look at information.
That's great. Yes, that's true. That's true. That makes sense. Thanks for that, Arnold. So now let's move on to the key element of in-house bank, which is the cash management. Can you describe how Eurofins manage the cash flow under this in-house bank model?
Sure. So basically, we will start with the most standard thing, I would say, the easiest thing. It's managing the current accounts. So at Eurofins, we are also a bit special because of our volumes. As I said, we have 800 to 900 labs, so legal entities, which means we have a lot of current accounts because you need also to define them by currency. So we have more than 1,000 current accounts and in more than 20 currencies. So it means we needed automation, we needed industrialization. Basically, you can't do it manually. So basically, how it works, basically you import your bank statements. Bank statements are read by the systems, and based on some descriptions that the bank will put on the bank statement, you will identify that it's an automatic cash pool, and you will find normally a reference that shows you which counterparty is to this transaction, so that you can link it in the system automatically, and you input it on the current account position, which allows you to follow the different transactions and to follow the balances for each currency. If you have a manual cash pool, I would say it happens also for Eurofins. We don't want to input subs on the ZBA cash pool, so they can also in the system input their bank to bank. Go to the payment module, the signature module, so that we sign there. We send it to the bank, and the next day you have it on the bank statement, and based on rules you automatically reconcile the bank statement with the bank to bank that you did, and it impacts the current account. So basically it's as much automated as possible. In this case, you just need to input a transaction bank to bank, which takes 30 seconds, and from there it flows. Then for the rest, everything needs to be automated. So basically, when you have those types of transactions, you need to have an automatic jobs that run the accounting entries that we send to the ERP. So you just need to set up the local chart of account for each country and the accounting schemes for each country, and then it's automated. In Eurofins case, as I said, we cannot allow the subs to be in overdraft on the current account, so we implemented some blocking authorization for overdraft. And basically, if it's a manual input, the subs, when they want to input, they will have a pop-up saying, okay, you cannot withdraw too much deposited. And if it's a ZBA cash pool, then we will have at least an alert that says, okay, the bank didn't do the work right, and they allowed the sub to be net borrower in the cash pool. It never happens, but we have this alert in place in case. Then, as I said, we have many currencies, so we need to have specific financial condition, interest rates conditions for each currency. On this model of current account, we are not too specific. We have the same spread for all the current accounts. We just have specific reference rate based on whether it's GPY, USD, Euro, and so on. Yeah. And then the system automatically through jobs will calculate the accrual of interest. We have also specific at Eurofins as the bank needs to monitor the cash pool position for each sub to make sure they don't pay more than what they have. We need to pay our interest in the bank, actually. Usually it's not the case. Usually you just put on the current account, let's say, an accounting entry saying, okay, that's the interest. At Eurofins, we need to pay in bank. So it was not possible in the system, in DataLog. Actually, DataLog decided to develop it for us. So you see, they can be really flexible when you have some real need. They do it. And you can also schedule automatically the sending by email of some reporting, like interest scales, for instance. So that's I would say the easiest part, but with the volume, you need to have some jobs and some automation.
Right. So from the cash management, maybe you can describe what is the model of financial facilities in Eurofins and how you provide the assistance to all your subsidiaries across the globe?
Yes, so this part was really critical for us. It was the part of financing our sub, and as you understand, we don't do it through cash pools. So basically, we needed to do interco loans or equity injection. And this is not the easiest part. So basically, the subs can, as we said, we have a pre-approval process to grant, let's say, an envelope of funds that will be available. So, for instance, sub in Japan do its funding request, and we approve 1 billion GPY. But they will not draw immediately the 1 billion GPY. Maybe they will draw 1 million, 100 million one day, then 200 million, then 300 million, and then 400 million, and then it will be exhausted. So it will be in steps. So it was important for us to be able to have this envelope of approval and then to draw down the different amounts. So that's the way we did. Basically, we thought about the concept of, let's say, banking revolving credit facility. With the bank, you negotiate a global amount and you draw on it if you need it, or you don't draw. And so we use the same model. So credit line, tranche, and drawdown. So at the tranche level, basically, we put the different information that will be critical for the transaction. So we have a screen here. If you can see, we have the concept of booking entity with the lender, basically. So it's the in-house bank that is at the top of the group. We have the counterparties, the ones that will receive the money. You can see that it's sub-product that is a loan, and an analytical center that is a senior loan. So we have senior, we have junior, deeply subordinated, we have bridge senior, bridge junior, bridge deeply subordinated. We have also real estate. So, and on all these types of loans, basically, we have a different spread. So here we have at least 10 different possibilities. And then you input the, I would say, the necessary and sufficient information for the system, because doing things manual, you can do a lot of mistakes. So basically, we ask the user to input the least necessary but sufficient information, and from there the system will calculate everything. So here we put actually the approved amount, we input the start date, the end date, so 5 years from now, 7 years from now, and so on, depending on the type of loans. And then from there, minimal input, I would say 10 different information to input. From there, the system will calculate everything. So that's on the tranche. And then below the tranche, we have the drawdowns, which will be the payments actually. And the system will check always if there is still enough funds outstanding on the tranche to do a drawdown. So that's how we make sure that an entity does not get more than what was pre-approved. So that's our concept. And we have 800 loans in total. We have 10 types of loan times 25 currencies, so it makes 250 standard condition plus the real estate loans. So I would say we have 400 different conditions. So it's a lot to manage. You can do a lot of mistakes if you do it in Excel and so on. So you need to have a system to do that automatically.
That's right. So with that amount, 800 credit lines, almost 400 conditions, how Treasury Lines helps in terms of managing the interest rate and also, for example, like withholding tax calculations?
Yeah. So basically, then it's an admin setup, I would say. So not for the users. We do some setup in the administration with criteria, and based on the input of the user, the right filters, the right condition will apply to each transaction. So if you see here the screen, so on the left we have the tranche, in the middle, and on the right you have the admin setup where we put the condition. So if we start with the screen in the middle, interest rate, so you can see there are some conditions. For instance, it needs to be a loan that is senior in GPY. That's the criteria. And in terms of output, you will have the period. So at Eurofins, we decide to pay the interest every 3 months. The interest will be in the same currency as the loan, so in GPY and so on. And you have also the period. So here it's a bit hidden, but you have the different quarters with the rate, basically. And for each period, we import through an interface the rate for our 400 financial conditions. And on top of that, on the right, you have the withholding tax. So basically, it's very simple. It says if you find interest rate, then you add withholding tax, and you see in terms of period, you have 10%. So it will apply a 10% amount of the interest. And so based on those two admin setup, automatically when a user input a tranche, so the screen on the left, initially, we saw the first tab, which is the input tab, let's say the financial tab. Here we are on the tab fees, and in the fees, you can see the fourth line. They are about the interest. So for every quarter, you have the rate, and based on what is really drawn by the sub, the system calculates the interest. And the 4 last line, they are the withholding tax. So each line applies to the interest line above, and it's based on a 10% amount. And based on that, basically, you will have the right settlement that will be also prepared in the system. So basically, the interest and the withholding tax will be netted to have the right payment that goes to the booking entity, to the lender. The rest you pay it to the tax authorities normally. And as I said, we wanted a system that is integrated. So basically, when you do this transaction, then it will go to the payment factory module of Treasury Line. So it's called Cash Pooler. In Cash Pooler, we will sign the payments, release to the bank, and then it goes to the beneficiary.
Right.
So it's based on a lot of automation. So this is one type of automation we do at the admin level, this kind of setups, and then the user just need to input the 10 necessary information, and then the system finds automatically everything. We can talk about it about interest. We could also say the same thing about settlement instructions. So basically which bank account you need to pay or to receive. A lot of automation.
Yeah. So yeah, obviously there's a lot of automations and rules has been created in the treasury lines. So how do you monitor the life cycle of each transactions and how reporting plays its role?
Yeah, so this is critical because, as I said, we have interco loans over 5, 7, 10 years and so on. So it can happen a lot of things, during this timeline. So basically, from the beginning, you need to be able to potentially extend, for instance, a loan. We have bridge loans that are over 1 year, but after 1 year, maybe the sub cannot pay and you need to extend. A sub, okay, may draw, but may also decide to repay part of the loan. So you need to be able to unwind some amounts so that it's a repayment. An entity can change in terms of financial structure, in terms of debt to equity ratio and so on. So maybe you want to adjust the spread, and to adjust the spread, basically we will change the category of the loan from senior to junior to deeply subordinated and so on. So you need to be able to change this qualification and to reflect it in the interest scale, basically. So you need to be able to do all that, to have all these events available in the system to do that. So we have them in DataLog. So it's been 2.5 years that we are live, actually almost 3 years that we are live. So basically we see that we are able to do all those things to manage transactions on the long run. And this is important. Then second thing, so as I said, when we input those type of transaction, basically we want also the payments, which are the critical things actually. We want the payments to also be in the same system. So it's an integrated system with the payment factory cash pooler. So when you do a deal in the risk module, basically it will go to the cash pooler module for signing, and you can have a multi-factor authentication and so on to make it really secure. And then you link it to SWIFT and the payment will go to the bank. So it was important that we have all this one-stop shop where you can do everything, the treasury activity, but the payment activity and so on.
That's right.
And last thing, of course, when you do those kind of transactions, we have 800 loans and so on. You need to have reporting. So in Treasury Line, we can generate tickets for operation. We can generate a report for the portfolio of loans, so seeing the 800 loans and the different drawdowns that we have. We can also generate interest scales for our subs, and we can send it directly by email to our subs automatically through jobs. So here you can see, for instance, on the right, you have an example of a statement of accrued interest. This is a daily one. So each day you have the position and you have the rate that apply and the interest for each day, and at the end the total what needs to be paid. You can you need also to automate your accounting. So basically you set up the different accounting schemes in the system, and from there you will the jobs will run, and every day or every hour you decide you will be able to generate the posting for your ERP.
Yep. Thanks a lot. Thanks for the sharing. Just have a couple more questions for you. Briefly, what is the next step and roadmap for Eurofins in relation to TMS implementation?
So
yeah.
So basically, as I said, we went live in July 2018. We wanted to go live on SwiftNet 1 year later, roughly, but we had just a small problem at Eurofins. We had a ransomware attack, so actually we had a delay, and
Right.
decided actually to change the hosting model of the TMS. Initially, we were hosting the TMS on-premise in Eurofins data center. And after this attack, we decided to migrate to a full SaaS solution, to cloud.
Right.
So Datalog offers this type of hosting also.
Yeah.
But to make the things right and so on, because cloud was not really the standard at Eurofins at this time, it took 1 year and a half. So we were able actually to go live on the cloud platform in February 2021. And from then, we resumed the project of Swift. So right now we are testing. We hope to be live now in September on Swift. So that's the big milestone. And then we will have to roll out. For now, we started with 2 countries, France and Luxembourg as pilot. And then we have a roadmap to implement all the Eurofins countries, so the 50 Eurofins country, over 2 or 3 years. So it will, it takes a bit of time, but there is a roadmap to do that progressively. And in 2 or 3 years, it's already a challenge because we have 50 countries. But really, the system is adaptable. It's really made and thought to be able to link efficiently with the different banks and to adjust the interface easily based on the needs of the bank. So it will be fine. And then in terms of next steps, we have a third phase of the project, I would call it, which is about cash flow forecasting. As I said, we need to have a pre-approval of funds for the financing of our subs. So basically, we need to give visibility to our subs over maybe 1 or 2 months, to say, okay, do I need funds in the short future or not? If yes, then I can anticipate the process of getting this approval. So that's critical for our subs. And another key functionality that we want to implement is about interconnecting. So interconnecting, we have 900 subs. So, right now they pay on the bank account and all the entities are called Eurofins something. So it's hard for the accountants to know which entity is paying what.
Understand,
so
yes.
if you put everything in the system, we have our codes, CFR 001, CGP 012, and so on. So we know which entity it is. It will be way easier. And we can also plug accounting on this. So basically it will help the accountants. So that's something critical for us. And we have also 1 or 2 other functionalities that we want to add, like bank fees analysis to make sure that our banks charge us the right amounts and so on. But that's really in the long term, I would say.
Right. Right. So yeah, thanks for sharing that, and glad to hear that roadmap that you have ahead for Eurofins. And perhaps this is going to be my last question to you. Having working together with DataLog for many years since 2017, how would you describe the collaboration between Eurofins and DataLog Finance since the inception of the TMS implementation?
So for us, it was really a very good project. First of all, we were able to deliver fast the first phase of the project within 6 months. So you see, it was fast, and I was the only one on my side to work on the project. So normally you have a team. In this case, it was not the case. So it was really a fast project, delivered with high quality. We are really happy after 3 years of the system, and we had quite a lot of specifics. Datalog consultants were really able to listen to us, to our needs, to understand our needs, and to find the best solution in the system, because the system is quite flexible. You can do the same thing but in different ways to adapt really to the customer. So data consultants were able to find the best way for us to make the things based on our constraints of industrialization, standardization, and automation. So that was really critical, because otherwise you need to have more staff, which is is not always possible. So you need to deal with these constraints and make sure that you meet all your needs when you achieve the project. It was the case. And DataLog Finance also, when they saw they may not have something that we needed, they accepted to develop it. So really a very good cooperation with the team.
That's great. That's great. Glad to hear that. And of course, on behalf of DataLog, we would like to say thank you to you and Eurofins for the collaborations. And thanks for that, Arnold. Just to summarize, I would like to share some overview of Treasury Line and the strength. So firstly, Treasury Line is an integrated and comprehensive treasury management system. It has an ability to handle all treasury operations with seamless integrations. Our second strength, Treasury Line, is adaptable and scalable based on client's requirement. It's a modular software. It's able to adapt into any dynamic parameter. Thirdly, we have the ability to deploy the project internationally with our local presence in each three geo. We also have the experience and expertise for deployment of TMS within international organizations. In terms of the implementations, we offer an on-premise. We also an expert in SaaS deployment. Um, Datalog has experienced more than 20 years. We have helped many large organizations on their treasury operations, changing from manual or lengthy process into improved automations. And of course, lastly, Treasury Line is a highly secure and proven compliance in order to maintain its efficiencies and remain secure for all our users. I think that's all from us today. Again, I would like to say thank you to you, Arno, for
Thank
as
you,
our
Rizwan.
guest speaker today, and of course, thank you to everyone who listening. Thank you very much.